Kaspa just crashed to $0.008 on some exchanges. Zcash is hitting all-time high market caps while the price stays flat. And a trader just explained why both of these facts might be the most bullish signals you'll hear all week. This isn't your typical hopium analysis. This is about understanding what actually moves markets when the dust settles. Hey everyone, welcome back to the channel. If you're new here, I break down crypto narratives that actually matter. No fluff, no recycled takes, just real analysis. Do me a favor, smash that like button and subscribe if you want to stay ahead of the market instead of chasing it. Alright, let's get into this. So, here's what happened. A Kaspa community member, goes by SkiBT Sum Trading, dropped a post that got the entire KAS community talking, and honestly, it's one of the smarter takes I've seen in a while. He's comparing Kaspa, Zcash, but the core message is simple. Fundamentals always win, eventually. Now, I know what you're thinking. Fundamentals? In crypto? The market where a dog coin can 100 times overnight? Yeah, I get it. But, hear me out. Because what this trader is saying isn't just theory, it's backed by pattern recognition, tokenomics, and actual on-chain data. And if he's right, we might be sitting at one of the best accumulation zones Kaspa has ever offered. The market just flushed. Hard, everything bled. And according to this analysis, that might be exactly what we needed to set up the next leg up. Let me explain why. Here's the uncomfortable truth about crypto. When prices dump, everyone suddenly becomes a fundamentals expert. Was this project ever even good? Did I fall for hype? Should I just cut my losses? Sound familiar? I've been there. We've all been there. It's human nature. Fear makes you question everything, but according to SkiBT Sum Trading, this emotional whipsaw is exactly what separates weak hands from smart money. He says at $1, $2, and $3 KS, nobody will want to sell because whatever the narrative is then, it will be too good. So what does that really mean? Well, when Kaspa is pumping and everyone's feeling euphoric, you won't want to take profits. But right now, when it's dumping and fear is maxed out, that's actually when the smart money accumulates. Now, let's talk about Zcash for a second, because honestly, this is where it gets interesting. Zec hasn't hit new price highs, but its market cap, all-time highs. How is that even possible? Tokenomics. Zcash has been inflating its supply, so even though the total value of the network is growing, the price per coin isn't reflecting it. The trader puts it bluntly. Even though Zeke isn't in price discovery, its market cap is at all-time highs. This is just due to its tokenomics, which likely aren't helping its price. So, what does this tell us? Fundamentals can exist, a project can have value, but if the tokenomics are trash, price won't follow, and this is where Kaspa stands apart. Kaspa has something Zcash doesn't: elite tokenomics paired with strong fundamentals. According to the trader, KAS has both fundamentals and also good tokenomics. Here's the kicker. 93% of Kaspa's total supply is already mined. Let that number sit for a second. 93%. That means the amount of new KAS entering circulation right now is just a fraction of what it was during the 2022 and 2023 bull runs. This is huge. Why? Because supply pressure is honestly one of the biggest factors keeping a price suppressed. In 2022 and 2023, when Kaspa was pumping, new coins were just flooding the market. Miners were dumping, early holders were taking profits, and the market absorbed it all while still pushing higher. Now, the supply shock is almost over. Less new supply means less sell pressure, and in a market where demand even slightly picks up, that's a recipe for parabolic moves. But wait, there's more. The trader points out that the recent market-wide crash, where KAS briefly touched $0.008 on low liquidity exchanges, might actually be healthy. Deleveraging like this is good because market makers hunt long positions before upside moves, he explains. This market-wide flush is not just bullish for Kaspa, it's indicative of an incoming market-wide push to the upside. Now I want to add my own analysis here. Market maker behavior is predictable once you understand their playbook. They hunt stops, they liquidate over-leveraged longs, they create panic. Why? Because it's profitable, and it sets up the next move. When you see a coordinated flush like this, not just Kaspa but the entire market bleeding, it's often a sign that smart money is resetting positions. They're shaking out weak hands, accumulating at discounted prices, and preparing for the next wave up. And here's what the data is showing us right now. Zealous swap, which dominates Kaspa's DeFi ecosystem, just hit $3 million in total value locked. That's 94% of all TVL on Kaspa Layer 2. For a network that's still relatively early in its DeFi journey, That's impressive growth. People are building. Capital is flowing. This isn't just speculative hype, it's real utility being deployed on-chain. But here's the metric that really caught my attention. The number of Kaspa holders who haven't moved their coins in over 3 years is now 5.5% of the entire holder base. That's not moon boys chasing pumps. That's conviction. That's long-term belief in the network. And when you see that kind of holder behavior combined with improving tokenomics and a market-wide flush, you start to see why some traders are calling this the opportunity of the cycle. Let's zoom out for a moment. What separates a good investment from a great one in crypto? It's not just technology, it's not just community, it's the intersection of fundamentals, tokenomics, timing, and market psychology. Kaspa is checking multiple boxes right now. The fundamentals are there. Kaspa is the fastest proof-of-work blockchain in existence. It processes blocks in 1 second using a block DAG architecture. That's not incremental improvement, that's a paradigm shift in how proof-of-work can scale. Bitcoin does 7 transactions per second. Kaspa, potentially tens of thousands once fully optimized. That's a narrative institutional investors understand. The tokenomics are there. As I mentioned, 93% mined, minimal inflation, no venture capital dump schedules, no insider unlock cliffs, just pure market dynamics playing out in real time. The timing is there. We're in a period where the market is shaking out weak hands, resetting leverage, and preparing for the next macro move. If Bitcoin breaks to new highs, the alt season that follows will reward projects with strong fundamentals and clean tokenomics. Kaspa fits that profile. And the market psychology? Fear is high. Doubt is creeping in. That's exactly when smart money positions for the next cycle. As SkiBT Trading put it, when price is in a sell-only mode, everyone questions the fundamentals and whether or not it will ever come back. But when sentiment flips, that's when you wish you bought more at the lows. Now, I'm not saying Kaspa is going to $3 tomorrow. I'm not saying it's a guaranteed 100 times return. What I am saying is that the risk-reward setup right now is asymmetric. The downside is likely limited from here, especially after a market-wide flush. The upside? If this cycle plays out like past cycles, and if fundamentals and tokenomics matter even half as much as they should, Kaspa could surprise a lot of people. Look, I don't do hopium, I do analysis, and the analysis here is clear. Kaspa has the fundamentals, the tokenomics, and the timing to make serious moves in the next phase of this market. Whether it hits $1, $2, or $3 like the trader suggests, I don't know. But I do know that the people who ignore fundamentals because crypto is irrational are the same people who miss the biggest opportunities. If you found this breakdown valuable, make sure you check out my other videos where I dive deeper into altcoin narratives and market cycles. Hit that subscribe button, turn on notifications, and I'll see you in the next one. And before you go, standard disclaimer. This is not financial advice. Crypto is volatile. You can lose everything. Do your own research. Never invest more than you can afford to lose. And always understand the risks before putting your money on the line. Stay smart out there.